All right, I cleaned up our example a little bit, just kind of fit it on half of the paper so we have room for the next set of journal entries we're going to do. So last time we did Ch6 Stereo, who was the buyer of the inventory. We said they bought so that they could resell to their customers, right? So they purchased, and we've recorded all those purchase transactions for Ch6. And there they are again. But from PW's point of view, they're the seller here, right? They're selling, or you could say Ch6 is buying, right? You have a seller, you have a buyer. So let's go ahead and do the journal entries for PW so that we can get experience with those sales transactions. All right, so now from PW's standpoint, on May 4th, they made a sale. We know the sale was on account because we said before, we identified it from the invoice as a credit sale. So that means accounts receivable should be your debit. Your offset, sales revenue. We made a sale for the $3,800, whatever the invoice amount is. Okay, to record sale to customer. And we can put the terms in. Terms to 10 net 30. We said whenever we're recording a sale, there are 2 journal entries. You'll be reminded that there's 2 because they'll always give you 2 amounts. Like here on May 4th, they tell you the cost of $2,400. And you obviously couldn't put the $2,400 in the first journal entry because you wouldn't, if you put $3,800 and then $2,400, your debits wouldn't equal your credit. So you have to do a separate journal entry. We know those accounts will always be cost of goods sold and merchandise inventory. And for now, they have to give you what that cost is. In a later chapter, we'll learn how to calculate that. But for now, enjoy them giving you that information. Cost of inventory sold. Done. All right, May 8th. May 8th. Ch6 Stereo returned that inventory. They returned the $300 worth of inventory, right? So on the seller side, when we get a return from our customer, we use that new account, sales, returns, and allowances. And then we decrease the customer's account with a credit, 300. And it should match, right? See, it matches what Ch6 Stereo recorded to their account. So we're making sure to reduce the account by 300. All right, if it's a physical return, or if they just give us more cost information, then we know there's a second journal entry needed as well. You're going to increase inventory, decrease cost of goods sold because we did not really sell it. It's coming back. And make sure you use the cost they provide to record cost of goods returned. Right. Done with that one. May 14th, we received the customer's payment. And of course, we know it's in the discount period. We get cash. Woohoo! But the cash it's going to match what Ch6 is recording. So it's $3,430. Why? Because we gave them a sales discount. So record your sales discount of 70 and reduce their accounts, the customer account, by the net amount owed, which was $3,500. Right? The nice thing is that it matches all the calculations we did earlier, so we don't really have to do the math a second time. To record receipt of customer payments in the discount period. Discount period. All right. Even more journal entries now, so let that sink in. Review it, read it, practice it. All right, good job.